We have put in place restrictions that have essentially incentivized our workers not to get truckers. These are our port operators. We need to incentivize these people to get off the sidelines and participate in the economy. We also have to start to remove and pare back the restrictions on travel and mobility. In the regular course of business, we would be traveling to China to do most of these extremely complex import businesses that we're working on. But if we went to China now, we would be subjected to an automatic 2-week quarantine. So we need the government to step back, let the economy flourish, and that will help us return to normal.
Regardless of what the government does or doesn't do, what are you telling your corporate clients here on how they can stay competitive at a time where large companies like Amazon or Starbucks may have more leverage over the supply chain than they do?
Well, that's a great question. So a retail report just recently came out. It showed that our food service industry is actually the best portion of our economy. It's the best performing sector, and there's a lot of lessons that we can learn from the food service industry. So let's talk about that. For one, we manufacture our food domestically, the vast majority of it at least. And this has given us a really big advantage. You'll remember that during the Trump administration's trade wars with China, this was actually the one point of leverage that we had against the Chinese, was that they were actually importing food from us, items like soybeans and beef. So finding ways to increase our domestic manufacturing, extremely important. We also need to diversify outside of just China. Or Asia, to be more specific. We've been working really closely with trying to set up new supply chains in Mexico and other Latin American countries. This comes into particular help when you're talking about certain items that are much less expensive to import. For example, paper. Paper items, we would normally be importing a huge amount of this from China. But now with the cost of the actual containers increasing so much so that the actual expense of importing the container is more than the value of the paper product that's inside. So the entire supply of China and Asia is now off the market. And at the same time, we're seeing a huge increase in the demand for items like paper. And this is being driven by the American consumer and by COVID. We're taking out, we're ordering in more now. So when that happens, we're talking about paper plates, to-go containers, foam containers, pizza boxes, and these items, we need to figure out how to import these items more inexpensively.
Can you talk to us about the U.S. manufacturing, ramping it up? Will that, though, come soon enough to fix the problem?
Absolutely not. There's absolutely no chance for that to happen. That's a long-term play, and I think it's something that we need to work on. Policies need to be put in place to try to encourage this to happen over time. Everyone right now is really looking at Q4. Q4 is upon us, and now that today's the first day of November, we're into what is now the peak holiday shopping season. Everyone's wondering two things. One, will the American consumer continue to spend her money on goods like she did in Q3, which led to a huge increase in retail sales, or will she start to spend her money on something she hasn't had in a long time? That's experiences, things like concerts, ball games, travel. The other thing they're thinking of is, will goods actually stay stuck in the ports, or will they make it onto the shelves? And to answer that question, we have to look at the timeline. So if you're trying to have your goods on the floor for Black Friday, which is the #1 day of retail sales in the entire calendar year, but your goods are still stuck at the port, there is absolutely no chance whatsoever that your goods are going to make it. And here's why. The process to get your goods out of the ports requires an appointment. You have to send trucks, pick up the trucks, bring them to your warehouses, unload the trucks, ship them to the distribution centers of the retail stores. They have to receive the goods, sort the goods, and then ship those goods out to their vast network of retail stores, sometimes in the numbers of thousands. Then they have to receive the goods, price sticker the goods, and put them on out into the floor. That process from start to finish, that's a 6-week process. So if your goods are still stuck at the ports, and last we checked, there's about 70, 80 vessels that are still stuck at the ports, you can forget Black Friday, you can forget Cyber Monday, you can forget Giving Tuesday, and at this point, Christmas is looking like a long shot.
All right. Well, Remy, don't be a Grinch. We spent some time down at the Port of Long Beach a couple weeks ago, and yeah, everything you said, we're seeing it play out there. It'll be interesting to see whether any of that stuff actually does make it to the store shelves, and whether we actually get some other stuff. Actually, Remy, we're going to have to leave it there. Really appreciate.
I don't want to be a Grinch. I just have to tell the truth.
All right. Well, we appreciate you telling the truth. That's all we want out of our guests here. Remy, great perspective here. iBrand CEO there. There's a lot of focus here on the supply chain, something we'll cover here, of course, every day here, particularly as we lead up to the holiday season.
We're known as the supply chain show.
Can I go back out to Long Beach?
You
Los
may.
Angeles?
You have my full permission.
You might need to stay there.
I've already started my Christmas shopping, by the way.
You hear that?
You know that, Taylor?
I hope so. You only have, what, 68 days?
All right. Well, look at this. Deere shares. They're higher today. This is a labor issue. I mean, we talked about wages. We talked about some of these supply chain issues and how labor is a big part of that. Well, guess what? If you're a worker, you got a lot of leverage right now. You're seeing a big deal here between the United Auto Workers Union and Deere, a big maker of tractors here, conceding to some of those workers. We're going to talk about why and why the shares are up. That's our stock of the hour. Coming up next, you're watching Bloomberg.
So goddamn rich.
I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Getting fucking rich. I want my fucking money. Griffin, I want my fucking money. Yeah, motherfucker. Shit, we're gonna be so fucking rich. Great. Damn it, we're gonna be so fucking rich. I want my fucking money.
You're an original,
Hey,
aren't
yelling,
you?
cowboy. Give me the fucking money. Get the goddamn money printer out. Fucking rich. Get the goddamn money printer out.
Top calls to look at some of the movers on the back of analyst recommendations. First up, Spotify getting an upgrade today over at Bernstein with a 280 price target. Market performed rainy. The analyst raising his outlook for industry-wide Music streaming shares up about 2.5%. Next up, CrowdStrike downgraded to neutral at BTIG. The analysts saying competition in the cybersecurity software industry on the rise, and annual recurring revenue growth for the company is actually going to moderate to about 40 to 45% here. Shares down about 5.6% here on the day. Lastly, let's take a look at Newell Brands, the maker of Rubbermaid, Sharpie pens, Calphalon pants, upgraded to overweight over at JP Morgan, which had a neutral rating for 4 years. The analyst now saying he's turning positive, tied to those recent divestments by the company and a redeployment of cash into growthier areas. The share is up about 3.5% on the day, and those, Taylor, are some of our top calls.
We're getting back to our stock of the hour. Romaine, you mentioned it. Deere heading to its best day since February after tentatively reaching a labor deal with the UAW that will keep its booming tractor sales going. Bloomberg's Kriti Gupta joins us now. And what is this, 10% in the first year and then a few percentage points after that?
10% in the first year, 5% in the third and fifth years, so really trying to retain long-term talent, and an $8,500 signing bonus in addition to retirement benefits, enhanced health benefits. The workers here really got a great deal. This, of course, coming after the first major strike since all the way back to 1986 for Deere, really spooking the company a little bit, saying, you know what, we have this massive capacity that we have to meet. How can we do it without our workers? So you can see them really making some of these concessions. Let's talk about the fundamentals of the company, though, for a second, because you do have to talk about the fact that food prices are at their highest since 2013. The biggest U.S. exports are, of course, grain and agriculture. So not only do they, there we go, got the right chart there, not only do they have to meet this capacity, but capacity itself is soaring. And this is, of course, the strongest demand in over a decade for farming equipment. So they really have to match that, in addition to the fact that EPS has been more than double the historical trend over the past 3 quarters. I mean, just take a look at this profit outlook, projected to grow by another $1 billion by 2023. You just can't afford to have a strike stopping all the success that Deere is poised for.
So these higher labor costs now for Deere, investors are still applauding the deal, and they have been for the last couple of weeks, even as the strike was going on. What is it that investors like most about this? Just that the strike won't continue, or the fact that they can maintain these margins even with higher labor costs?
A little bit of both, really. And remember, like I said, you have this kind of ramp up in capacity. And if you actually look at shares, they're up the highest since all the way back in February. If you ask what happened then, it's when they upped their forecast to begin with. So you really do see Deere shares not only, or Deere shareholders, I should say, not only expecting a speedy resolution to the strike, but saying, we'll do whatever it takes. We're okay with whatever the terms are. Just make sure you can finally deliver on all that capacity.
All right, Kriti Gupta there with our stock of the hour. That is Deere. Another stock we're keeping an eye on here is Zillow. Those shares down more than 5% here. We're getting a headline across the Bloomberg terminal saying that the company effectively going to sell off most of the homes that it acquired as part of that flipping business. Of course, we know when they reported earnings, they basically talked about how that business didn't quite pan out as great as they thought it would. They said they were going to acquire about 5,000 homes going forward. I guess they were kind of selling them maybe not quite for what they paid.
Well, and what was really interesting, I believe it was last week when you were off, there was the news that some of the algorithms had been tweaked, that they were buying homes in all cash or whatever they do for a lot more than everyone else. And so effectively, if you can't flip it in time and it's harder to get the labor, it's harder to get the lumber, then you're selling it, I believe, and I'll have to go back and check some of the analyst notes, Romaine, at a loss on average relative to what you pushed it for.
They won it for $2.8 billion. Let's see if they get that for 7,000 homes now.
Right, so they're looking to sell about 7,000 homes here, and it does not quite make it clear if this is a complete exit from the business.
Right.
Did they say that during the report?
Not that I can see.
They will stop making new offers in the home flipping operation, at least for the remainder of this year.
All right, we should point out, too, that this is according to Bloomberg reporting, citing people familiar with the situation. This is not coming from Zillow itself. This is based on reporting by Bloomberg reporters, and, of course, we have reached out to Zillow for comments here. The share is actually off the lows of the day. We'll bring you any related news on that as soon as we get it. We'll be back in a moment. From New York, you're watching Bloomberg.
Gary Gensler, I want my fucking money. Money. I want my fucking money. Gary Gensler, I want my fucking money. Money. I want my fucking money. Gary Gensler, I want my fucking money. Gensler. I want my fucking money. 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 I want my fucking money. Gonna be so goddamn rich.
I think it's time to blow this scene. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Gonna be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Great. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't you?
yelling,
Cowboy.
give me the fucking money. Get the goddamn money printer out.
Great. The bounty cutter.
We're gonna be so fucking rich. Get the goddamn money printer out.
Gender-neutral toys really entail? I mean, there's the marketing and then there's the making of the actual toy, the conceiving of the toy.
Yeah, I think the actual making of the toy doesn't change dramatically at all. All toys are for all children. It's just often how they're marketed, and children pick up on all those cues, whether exactly the same ask.
I turned off the audio. My bad if I kind of threw things off. My apologies. I did that on purpose, actually. I didn't want to hear this lady talking about Legos.
Or different families in, say, an exciting storyline, and then making sure that that representation is thinking about how would you view it, whether you were a boy or a girl, whatever your ethnic background is, whether you have a disability. All of those things need to be included so that it's more diverse.
Olivia, we have time for one last question. I got to ask you about California and Governor Gavin Newsom signing a law requiring big retailers to create a unisex section for kids' items like toys but not apparel. Does this move the needle at all? Is this a good thing?
It possibly will move the needle in California. We've never advocated for any sort of legislation. We really like what France have been doing for the last couple of years, where they have a charter and a voluntary code of practice with retailers. The issue we have with California is that the shops that are asked to have gender-neutral aisles still can have girl and boy toy aisles. And in the UK, we haven't had those now for quite a few years because our campaign was so successful in 2012 until 2015. So we don't really understand why, you know, if they want to legislate, why not just get rid of it?
Sounds like there's still work to be done in California then.
Yeah.
Olivia Dickinson of Let Toys Be Toys joining us from the UK. Thank you so much. Romain?
Charlotte here, keeping an eye here on the markets as we count you down. The final hour of trading here, S&P 500, the Dow, mixed day.
What's up, Ape Nation? Marcel Kalinovic, Boss Blunts here. Power Hour is upon us. Let's see what's going on. We got GameStop up 12%, AMC up about 5%. Beautiful fucking Monday. It's going to be a wonderful week, I think. I'm not a financial advisor. Nothing you hear is financial advice. This is strictly for your education. Feel free to join the Discord if you'd like. I dropped a link in the chat. I'll leave it in the comments as well. It may only be valid for a couple of days. GameStop's moving. She went from 11.9 to 12.25%. That's some interesting shit. 12.3. I think we might be seeing some delta hedging. 12.33%. This is not FOMO buying, I don't believe.
Supply chain team's done a great job on semiconductors. We've been able to secure semiconductors for our entire...
I'm going to mute the video over here for a moment, guys, all right? Give it 1 second.
The most crucial moments in the trading day. This is Bloomberg Markets, The Close. with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
We're counting you down to the close. 1 hour left here. Romaine Bostick alongside Taylor Riggs and Shanali Bassick here, looking at the S&P 500, trying to stretch out for a third straight day.
And at least, Shanali, you're looking at NASDAQ trying to hold on to some of those record highs.
Yeah.
And we got some breaking news here, actually. For those folks, of course, interested in stablecoin, U.S. agencies here in the United States are apparently seeking the power for crackdown on stable coins. That's the main headline right now, crossing the Bloomberg terminal here. Effectively, the Treasury, the Fed, and Congress seeking to impose bank rules on token firms. The SEC and the CFTC are going to take leading roles in oversight for now, though they are asking for additional power from Congress, of course, to crack down here on stable coins. Let's talk a little bit more about this. We have standing by our senior markets editor, Mike Regan. Mike, what exactly is happening here?
Well, so first, Romaine, for those who aren't really in the weeds of the crypto industry, the question is, well, what's a stable coin? And it's a really important part of crypto markets. It's basically a token that's designed to track the U.S. dollar or another currency one-to-one. So why is that important? Well, in a lot of the sort of, out there markets in crypto, not your Coinbase or your Binance exchanges, but in some of the more fringy type of markets, stable coins act as the stand-in for the U.S. dollar because these exchanges, these decentralized...
Well, they're supposed to.
They're supposed to, yes,
right.
Yes. Sometimes there's some issues...
Right, isn't the issue that...
Well, the issue
they may not necessarily be backed by dollars.
From the regulator's standpoint,
yes,
is they're not 100% sure what they're backed by,
right,
and they have worried that their growth has been so spectacular, up about 500% in the assets in stablecoins to about 127 billion over the last 12 months, that they're worried it's starting to become sort of a systemic risk to the financial system as a whole and to the economy as a whole. So the group is basically urging Congress to get ahead of this issue and pass some legislation to basically force the issuers of stablecoins to be regulated like a bank with deposit insurance and whatnot.
And we should point out, Taylor, we actually did see, believe it or not, a drop in Bitcoin, not a stable coin. But I guess the broader crypto space, maybe they hear the word regulation, they get scared.
You missed it last week, Romaine. We had all kinds of fun talking about the underlying technology that was so good of Ethereum.
I hear people are investing in the underlying
and everything else.
I talked to Steve Mnuchin a couple weeks ago.
What did he have to say about the underlying
Me and him are
technology?
tight right now, and basically what he told me, he said exactly that he is invested in the underlying technology, not necessarily in the coins themselves.
Let's get back.
But look at that, the SEC and the CFTC want to jump into stablecoin. Surprise, surprise.
Romaine, and I guess, Mike, the concern is always the horse race between regulation. You want to, of course, as you said, not present a systemic risk if that's the concern, but you don't want to stifle innovation.
They want to regulate all this crypto and stablecoins.
Maybe what the investors are hoping for when it comes to regulation.
Well, a lot of investors just wanted some further clarity on what exactly the government expects of the crypto markets, and this gets them somewhat there. But, again, this is the President's Working Group on Financial Markets basically saying, Congress, you need to pass this legislation. And as we know, watching D.C. on any given day, there's no guarantee that that's going to happen anytime soon. But at least this gives sort of a marker for the industry to look at and say, okay, the government, at least the President's Working Group, wants stablecoin issuers to basically come out of the shadows and be regulated like regular banks, as well as providers of wallets, that hold cryptocurrencies. They want some federal regulatory oversight on them. And the third thing that they come out and say, which I think is important, is they're talking about there needs to be a separation between commerce and wallets. So what does that mean? A lot of people are interpreting that, I think we'll interpret that to mean Facebook. They've obviously had ambitions to start their own stablecoin called Diem. And, this group is saying, like the banking regulations, you need to separate financial banking activity from pure commercial enterprises like Facebook. So, this puts a big question over whether a company like Facebook will be able to have its own stablecoin cryptocurrency given this type of scrutiny.
Yeah, that'll be interesting. Interesting reporting here, of course, a big report here, but they are still asking, of course, for more authority to actually do this. Mike Regan, our senior markets editor, helping break that down. We are seeing a slight dip here in some of the crypto assets around the board here. Some of that, of course, preceded the headlines here, but nevertheless, some of that in the red. Bitcoin right now, right around 61,000. All right, we want to turn back, of course, to the broader market, you know, the S&P, Dow, you know, all those types of things. Jordan Jackson, global market strategist for JP Morgan Asset Management, joining us right now to talk about some of those issues as well as some of the economic and macro issues. And Jordan, I do want to start with some of those macro issues. An hour ago, we started our show with a look at Washington, with a look at some of the spending proposals and the potential that some of those proposals might not see the light of day if certain members of Congress get their way. Are you at all concerned about the amount of money coming into this economy, potentially coming into this economy, I should say, or are clients not necessarily too worried about this at the moment?
Well, I think we should remember that the new spending would be come through via reconciliation. So there would be some revenue measures that would be tied to it. So
I want my fucking money. 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 I want my fucking money. Gary Gensler. I want my fucking money. Money. I want my fucking money. Gary Gensler. I want my fucking money. Gensler, I want my fucking money. 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 I want my fucking money. J Squad.
Gonna be so goddamn rich.
I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Getting fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Shit, we're gonna be so fucking rich. Great. Damn it, we're gonna be so fucking rich. I want my fucking money.
You're an original,
hey,
aren't
yelling,
you?
Cowboy. Give me the fucking money. Get the goddamn money printer out.
Great. Bounty cutter.
We're gonna be so fucking rich. Get the goddamn money printer out. Gary Gensler, I want my fucking money. 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 I want my fucking money.
Look at this guy. Apparently he's stuck. JP Morgan Asset Management strategist is not going anywhere. He's not giving us any strategies today. I assure you that. Yeah, everything's looking pretty good. GameStop's up about 10.96% right now after some selling off. Or should I say some shorting? Who knows what the fuck it was, but that's a pretty heavy candle in my opinion to be just straight selling. It's a lot of volume. Out of nowhere. But apparently we broke it. Let's see if we can't restart that. It's really shitty that so many people are getting laid off. Unfortunately, I've known quite a few friends, quite a few people that have gotten laid off so far. And some people that have quit their jobs. Unfortunately, some of these excellent nurses are no longer allowed to work.
Some breaking news remaining. This is a big deal. Softbank Group is said to be exploring an option, including the sale of Fortress Investment Group. Remember, that is the asset manager that Softbank had acquired 4 years ago, about December of 2017. Now, we do know that the talks are at an early stage, but remember, originally, Softbank had purchased Fortress because it was here in New York City, helping to solidify the Vision Fund and beef that up. But of course, they were unable to mesh some of the Fortress operations with its own. And so, here we are, Romaine, with Softbank Group, trying to explore some options, which might be, again, the sale of Fortress Investment Group. Originally, I believe 4 years ago, was a purchase for about $3 billion.
All right, yeah, that's a big deal here. Of course, 46 minutes or so until the closing bell here in New York. Let's get you caught up here on the broader markets. Looking at S&P 500, relatively unchanged today, trying to stretch out for a 3-day run. The NASDAQ right now trying to stretch out for a 6-day run. Not quite sure whether it's going to get there. Of course, the Dow Jones Industrial Average, that's been all the talk today. At one point today, it did trade above 36,000. Of course, a lot of hay made over that Dow 36,000 book that was published all the way back in 1999. Jim Glassman going to be joining the show in a moment, not only to talk about that headline, but more importantly, a lot of the substance behind the title of that book. And there was a lot of substance to it. Gold getting a little bit of a bid here ahead of the big Fed meeting. Interesting move here. And there's your 2-year yield camped out right around 50 basis points after dropping to 42 last week. Flip up the board, some of the individual movers. Well, this is what people are looking at right now. Tesla, this is where they're headed to. The big record close here, of course, on Friday, getting another bid here, up almost 7% here on the day. All the positive news seems to be flowing into this company. $1.2 trillion billion market cap. Lucid Group moving lower here despite finally rolling out its first EV to customers over the weekend. And then keep an eye on the vaccine makers. Novavax getting the bid as it continues those rolling submissions for its protein-based COVID shot. And Moderna shares, though, moving in the opposite direction as the FDA wants a little bit more information here about using its shot on teenagers, 12 to 17 years old. It's time now for our Options Inside segment where we bring Abigail Doolittle into the conversation as we do every day around this time. And Abigail, we're looking at a market here that continues to try to reach for new record highs. It's also a market where you're not really seeing volatility as much as you would think you would see, at least as measured by the VIX.
You know, Romaine, that's a great point because really not a lot of hedging at this point. Now, we've had some options experts in October who are saying because there had been so much protection put on in September and much of October that for that reason now we have hedging coming in. I think our next guest, Scott Bauer, Prosper Trading Academy, you may agree with that idea, Scott, that hedging had been a little bit too much in September and October, and we just continue to have this rally in the last few days, record high after record high. It's interesting today because we have had the S&P 500 fluctuating, that VIX higher, so sometimes it's not great to see the fear, quote-unquote, fear index higher with the S&P 500. But overall, you think that a little bit of smooth sailing ahead?
I really do. You know, 2 months left in the year here, and, you know, we may see a little bit of chop, but I do think we're going higher by the end of the year. And, you know, a lot of people are focusing on that Morgan Stanley article that was put out this morning saying the bullish run only has a few weeks left, you know, through Thanksgiving. So maybe people are looking at that and elevating the VIX on that a little bit. But, you know, all signs to me point to a higher market by the end of the year, unless the Fed throws a big curveball into the markets this week. And I don't think they will do that. I mean, the market is already priced in the fact that the tapering is happening sooner rather than later. So unless they throw something in, Abigail, where, you know, they see rates actually rising sooner than anticipated, which I don't think is the case,
right?
I think this market just grinds higher, and I think it's a great place to buy some protection.
Yeah, well, that's actually what I wanted to ask you about, because is it dangerous that we have the VIX at such low levels, not at historically low levels, but still below 17, below 20, so suggesting that maybe there's some complacency out there. Is that a warning sign? And in terms of buying volatility, I know that a lot of professionals say that that's not for the retail trader. How would you do that for a retail trader?
Retail trader, I think you can go in and actually just buy some puts in SPY or maybe in the triple Qs, which the volatility in both spaces there is very, very cheap. That's probably going to be a little bit better of a place for a retail trader than to maybe trade in the VIX at this point. Much easier access, pretty straightforward, and I would go out and buy some December puts or put spreads.
And more specifically, on a stock-specific name, you have a really interesting idea here that's not just a hedge, I suppose in some ways around a possible drop, but certainly against inflation, and that's Costco. Very, very clever idea.
I love Costco, and as you just said, I really look at it as an inflation hedge and a growth stock really combined together. This stock has really escaped to this point any of the supply chain constraints. They're fully shelved. Everything at the stores you can get, and there over the next 2 months going into the holidays. I love the upside. Love that there's going to be, in my opinion, all-time highs. I am buying a December 17th expiration, 505, 520 call spread, $15 wide. Pay about $3.50 for it. Look for all-time highs in Costco.
Great stuff as always. Scott Bauer, CEO of Prosper Trading Academy. Thanks as always for joining us for Options Insight. Taylor, back to you.
Thank you as always, Abigail Doolittle. Let's get a quick check on some other big stories, of course, at this hour that we are following, and we're tracking the fallout of the global supply chain crunch. Let's look at some of those stories today. President Biden taking steps to address bottlenecks after discussing issues with other G20 leaders. The leader wants to build up more stockpiles of key materials. Supply chain problems are showing up in economic reports as well. In Canada, growth unexpectedly wavered at the end of the third quarter. Disruptions weighed on retail and manufacturing as well as car sales. And meanwhile, in China, the economy is under pressure as well from both the supply and the demand side. Yesterday's PMI data showed manufacturers are struggling with rising costs and electricity shortages. And Bloomberg Terminal users can read more about these stories in our newsletter, Supply Line. That's NI Trade NL. Romaine, we're known as the Supply Chain Show. Aren't you excited?
Yeah, we are. We do a lot of work on this, and of course, this is a show that gives you that. We want to do recap some news that broke a little bit while ago here. The Treasury Department putting out a report basically saying that the Federal Reserve and other regulators are urging lawmakers to let them police stablecoin issuers like banks. Jay Powell has now weighed in, saying he actually backs this call for a regulatory framework for stable coins here. So you're starting to see the drumbeat here by the major regulators, the major financial regulators here in the United States, saying they should be allowed to regulate stable coins in a similar manner as they regulate banks, with capital requirements and, quote, constant supervision. We got constant supervision, of course, of the markets here. S&P 500 flat on the day. We'll be back in a moment. This is Bloomberg.
Yeah, it looks like Bloomberg News is not giving us great information on Canada right now. So I think Canada's in a bit of a crunch, just like the rest of the global economy. There's been some minor short action, it looks like, over here, or some minor selling. It's a pretty low volume even still. And never mind, I take that back. The volume today has been good, though, overall.
All right, once again, that big news on stable coins. Of course, the Treasury Department putting out a report asking for more regulatory oversight of stable coins, constant supervision, and to treat some of these issuers like banks. Now, Pat Toomey, who's the top Republican on the Senate Banking Committee, he says that Biden should not, quote, stretch the laws to regulate stable coins. So obviously a big fight up ahead here over stable coins and how they're regulated here in the United States. Taylor.
And you keep us abreast of that breaking news. I bring you some other as well, this time coming from Softbank, as we've noticed in the last few minutes, coming out and saying that they are exploring options, including a sale of Fortress Investment Group. Remember, they made that purchase for about $3 billion roughly 4 years ago, December of 2017. In part, well, maybe because they haven't been able to mesh all of the operations together. It was a big part in trying to help the Vision Fund really expand. And for more on this, let's bring in our Emerging Action segment with Sherry On, the co-anchor of Bloomberg, Daybreak Asia and Australia. You do it all, and also our SoftBank extraordinaire. What do we know so far about any potential sale and the why?
Right now, what Bloomberg is hearing is that perhaps the difficulty in putting these operations from Softbank and also Fortress Investment is one of the catalysts why they actually want to get rid of this investment. Now, you said it, there have been some difficulties in meshing their operations, and this is because CFIUS here in the U.S. got in the way with the Committee on Foreign Investments in the U.S. Back in 2017, saying that, okay, they can have the transaction, but they have to operate separately when it comes to day-to-day operations. So their big vision of having them, expand their capabilities, accelerating Softbank 2.0 transformation strategy, all of those big ideas that they had for these two companies actually did not work out. So now we're hearing that perhaps they're trying to get rid of this $3 billion investment that they made 4 years ago.
Super interesting on Softbank, but let's move over to emerging markets. A different area, India, for example, because you have India where there are some strategists saying that liquidity could become an issue. Why exactly is that?
Yeah, it's really interesting because, for example, Softbank has had such a big stake in India as well. We have seen that IPO rush, and one of those ways that these companies want to be selling their stakes to the public has been by going public, and one of them has been Paytm. Softbank, in fact, there has been reporting that they do want to unload some of those shares. Right now, we could see, as you say, that liquidity tightening because some of those funds could be diverted to these IPOs. We're talking about the Sensex having gained, take a look, 26% year to date, but now with all of these public offerings, including not only Paytm, that would be the digital payments company that Softbank has a stake on, but also FSN, which operates a beauty startup, not to mention insurance seller, Policy Bazaar, and lodging platform Oyo as well.
All right, Sherry on there, co-anchor of Bloomberg Daybreak Asia and Daybreak Australia, getting us caught up on what's going on in emerging market action. Coming up, we're going to talk to Ambassador James Glassman. You know his name. He came out with an interesting book several years ago, a couple decades ago, Dow 36,000. But of course, beneath that splashy headline, there was a lot of substance to effectively what that book was talking about. Basically, a diversified portfolio, buy and hold. 36,000. It's here, buy and hold. Well, it actually worked out here over the last 22 years. He's going to be joining the program in just a minute to explain. This is Bloomberg.
I want my fucking money. 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 I want my fucking money. Gary Gensler. I want my fucking money. Money. I want my fucking money. Gary Gensler. I want my fucking money. Gensler, I want my fucking money. 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 I want my fucking money. Gary Gensler, I want my fucking money. J Squad. Let me so goddamn rich.
I think it's time to blow this thing, get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Getting fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. We're gonna be so fucking rich. Great. Damn it, we're gonna be so fucking rich. I want my fucking money.
You're an original,
hey,
aren't
yelling,
you?
Cowboy. Give me the fucking money. Get the goddamn money printer out.
I'm Mark Crumpton with Bloomberg's First Word News. President Biden says the United States is ready to be a leader again in the fight against climate change. Addressing the UN Climate Summit in Scotland today, the president's statement comes despite discord in the U.S. concerning his ambition to steer billions of taxpayer dollars toward renewable energy.
We'll demonstrate to the world the United States is not only back at the table, but hopefully leading by the power of our example. I know it hasn't been the case, and that's why my administration is working overtime to show that our climate commitment is action, not words.
Mr. Biden acknowledged that the U.S. and other developed nations are largely responsible for climate change and said actions taken this decade will be decisive in preventing future generations from suffering. West Virginia Democratic Senator Joe Manchin is urging his colleagues to pass a bipartisan infrastructure bill, saying holding it hostage won't help secure his support for spending legislation.
I will not support the reconciliation legislation without knowing how the bill will impact our debt and our economy and our country. And we won't know that until we work through the text.
Senator Manchin has been a key driver, along with Arizona Democratic Senator Kyrsten Sinema, in the extended negotiations over the president's economic agenda. Staff shortages are becoming more of a challenge for U.S. prison agencies. It's long been a problem given low pay and the difficult nature of the work. But the pandemic has pushed some correction systems into crisis. Many officers are retiring or quitting, and officials are struggling to recruit new employees. And some prisons whose populations dropped during the pandemic are seeing their numbers go back up. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets The Close with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
Less than 28 minutes to go here in the trading day. This is the countdown to the close.
48.08 on the S&P, Shanali.
Yeah, wavering between those highs and the lows here. We only have 4 sectors here in the red, Taylor. That's communication services, IT, healthcare, financials, energy leading the way, and that makes the difference here when we look on the gains and losses.
Well, let's take a look at some of the individual movers here. Tesla having a monster day, up 7% here. That $1 trillion market cap, it got a little bit bigger on the day. Believe it or not, that's not the biggest mover in the S&P 500. That belongs to Franklin Resources, going to buy Lexington Partners. This is a huge shift. A lot of these mutual fund companies moving into private equity, moving into alternative assets. We saw that with T. Rowe Price and Oak Hill. This trend continues. This is a way to retain clients. Investors like it. Shares up 11% here. Brown-Forman and Levi Hogg all higher here on the day because of a potential deal between the EU and the U.S. to kind of relax some of those tariffs. And Zillow down about 6% here as a new report here by Bloomberg about its home buying program.
You know, I was testing you.
What's that?
I said 48.08. I meant 46.08. I was hoping you would give me a good Romaine Bostick correction. My brain and my mind aren't working together, though, because we're talking a lot about round numbers today. We hit another big round number earlier today, not on the S&P, not on tech, but on the Dow. It's something that we don't talk about often, given it's not the market cap weighted. It's more of a price weighted index. But again, you hit 36,000, Romaine, earlier this morning. Since then, we're off that. We're at about a 35.8, 35.9. But it is really interesting, Romaine, as we're talking about, well, you know, a very famous book. It came out in 1999 called Dow 36,000. It didn't take 3 to 5 years to reach that. It took about 22. Interesting to see if we can get back up to those levels and close there.
Yeah, and a lot of people, of course, make a lot of jokes about, of course, the title of that book. I also feel like a lot of people who do that didn't actually read the book because there was a lot of substance underneath that call for Dow 36,000, the idea of a diversified portfolio, the idea of sort of buying and holding. Joining us right now, of course, is the author of that book, James Glassman. He's the chairman and CEO of Glassman Advisory. He's also a former Undersecretary of State. It's been, of course, a long career for him since he wrote that book. Of course, this is on a day where we do finally get, at least on an intraday basis, above that 36,000 number. Jim, I want to focus not so much on the title of the book, but on more the rationale of how you and Kevin Hassett sort of came up with the rationale for why stocks would outperform in such a way that would one day get us to that 36,000 level.
Sure. Well, we started really with what's called the equity premium puzzle, which was first articulated in an article by Mara and Prescott in 1983. It's kind of a simple idea, which is that stocks return a lot more than bonds, probably by about 5 percentage points. And Jeremy Siegel and others have shown that, in fact, over long periods of time, stocks are no more risky than bonds if we look at volatility. So that's the puzzle. And we felt at the time that investors were solving the puzzle by bidding up the prices of stocks. When you bid up the price, the returns drop. So that was the basis of our book, kind of the big idea behind the book. That was the thesis. The strategy was very simple. Buy stocks and hold on to them. And it doesn't matter whether they're going to go to 36,000 tomorrow or in, as it's turned out, 22 years, you're going to do really well. And that's essentially what's happened. I mean, the book was mainly a hymn to buy and hold investing, which has proven over the years to be the best way to invest. Not to jump in and out, but to hang in there.
And that's been a more underappreciated notion of that book is that buy and hold strategy that you so eloquently laid out. And yet I think what was so interesting is you talk about how now a lower proportion of Americans actually own stocks than they did when you wrote the book. Why do you think that is?
Yeah, that's a real shame. Well, I think one of the things that we underestimated, in fact, when we wrote the book, was that despite the fact that stocks are not that risky in the long run, that is to say, you know, for 10-year periods going back 100 years, they've only lost money 4 times. They've never lost money over 17-year periods. They are very scary and very volatile in the short term. And look what we've had, you know, in the last 20 years. I mean, we had 9/11. We had the worst downturn in the U.S. economy since the Great Depression. We had the worst pandemic in 100 years. Now, I think stocks have done extremely well despite that, but that's very scary for investors. And yes, we point out that, I just recently pointed out that Gallup has done a poll that shows that 56% of Americans own stocks in any form, down from 60% 22 years ago. And I think that's a real shame. And I also think that public policy ought to be directed much more towards encouraging Americans to own stock through, for example, expanding IRAs. And you know, we're seeing in the current reconciliation bill actually a proposal to contract IRAs. That would be a big mistake.
Jim, I am curious here. I mean, when you wrote that book, what constituted monetary policy was a lot different back in the late 90s, although it was probably moving towards where we are today. And even fiscal policy has shifted a lot here. When you talk about buying and holding,
what's going on, Pam?
Are you doing it within the context of
Irish
the risk
it's good to see you.
Stocks, I guess, on their own offer, the risk reward, I should say, or are you also looking at it too within?
We got 15 minutes left here in Power Hour. That is what I've been waiting for.
Whether implicit or explicit, by monetary policymakers, by fiscal policymakers, that has, I guess, led us to where we are today, where a lot of folks don't feel that we can't really go down as long as the Fed is there.
Well, certainly I couldn't have predicted 0 interest rates. But let me just say, this is a great question. And my feeling is that certainly in the short term, maybe even the medium term, yeah, we ought to pay attention to Fed policy. But, you know, if you look at the whole scope of American history, the fact is that the U.S. economy has done consistently well over and over again. Now, we make policy mistakes all the time, but markets react, businesses react, and we do really well. And essentially, you know, an investment in stocks is a bet on the U.S. economy, and that has turned out to be a really good bet, no matter who's in charge, you know, whether it's Democrats or Republicans. I mean, I hate to say, as somebody who's devoted his life to policy issues, that policy doesn't matter, and I think it does, but there's a certain equilibrium that we come back to. And for investors or long-term investors, if you're thinking about retirement, for you to worry about what Fed policy is today or tomorrow, or what Congress is going to do in passing this or that bill, I think that's a mistake. I really do. I think just putting money in on a regular basis and keeping it there makes a whole lot of sense.
We've heard a lot about the death of the 60-40 portfolio. How would you respond?
I have to tell you that I would push for high proportions of stocks in a portfolio. It's not simply a matter of the fact that currently bonds are yielding very low amounts. I really do think that stocks are where to be, and with an equity premium still at 5 percentage points, it just makes sense to be there. I'm not necessarily telling people to put 100% of their money in stocks if they need to take out cash, in the next 3 to 5 years. I mean, don't be crazy about it. You have to do some kind of planning on your own. But in general, if you're a long-term investor, and I mean by that 10 years or more, I would be as aggressive as possible with owning stocks in a diversified portfolio.
Jim, real great to catch up with you here. Of course, on this day, a lot of people making over 36,000. But once again here, great insights here into, I guess, how the markets work. And I guess we'll see what happens over the next 22 years. James Glassman, Chairman and CEO of Glassman Advisory, co-author, of course, of that book. The randomness of Wall Street. You talk about Burton Malkiel and how, he kind of was a big critic of this book at one point, but he kind of also talked about the idea here of how the randomness sort of leads us to where we are today here. And here we are in a day quoting Dow points. We never quote Dow points here.
We were at about 8% on GameStop a few moments ago.
Right?
Looks we climbed a little bit, right around the 9% gains for the day, 200. Question is, are we going to end the day above 200 for GameStop and above 36 or 37 for AMC? That's going to be the interesting thing over the next 10 minutes, in my opinion, to kind of see what's going on for tomorrow. What's up, Diana? It's good to see you. Hey, Rennie, Irish, it's good to see y'all. Thanks for coming out, Giga. You have no Guinness, man? That's all right. Have some water. I'll throw you a Miller Lite. What's up, Stacy, Pete? It's good to see y'all. Thanks for coming out. Just kind of hanging out here, seeing what's going to happen here in the next few minutes of today. I'm trying to decide if I'm picking up more shares or options tomorrow for GameStop and AMC, either tomorrow or the day after. I'm not sure just yet. I have a feeling tomorrow's going to be another nice green day, though. After seeing today, I don't think that today was an accident. I don't think that today was an accident. I think it follows the algorithmic pattern perfectly. Sucks. Let's put something better on.
Gonna be so goddamn rich. I think it's time to blow this thing. Get everybody in the stuff.
AMC earnings is on November 8th. I repeat, AMC earnings November 8th. Confirmed by AMC official press release.
listen, I want my fucking money.
You're an original,
Hey,
aren't you?
yelling, cowboy, give me the fucking money.
So they're cutting it close. AMC's coming close to 37. GameStop's coming close to 201. I don't know what the hell is about to happen. Today's November 1st. All new haircut regulations, haircut collateral. That's literally what it's called. Haircut collateral regulations. So anything that's not AA or AAA rating is getting a haircut. It means that they're worth less as asset collateral, anywhere between 15 to 100% less, depending on the rating.
So fucking rich. Get the goddamn money printer out.
This is Bloomberg.
Got a lot of resistance here. We're gonna try to beat 201 and 37 bucks on AMC and GameStop. Look at how close that is. That thing's off by 4 cents. They do not want it over 37 bucks today. This thing is struggling to stay under 250 right now. Look at that. Look at that. Look at that candle. Wow. That's some short action if I ever seen it. See, they're trying really hard to get that GameStop underneath 200. They really want it to be under 201, 200 with 1 cent. Look at, there it is, 199.97. Wow. The closing is very important for these guys, for these hedge funds. Stacy says patience paying off. Holding AMC GME 9 months. That's right. Good for you, yeah. I'll hang on as long as it takes. We'll see what happens. This crazy casino. Got just under 5 minutes left. Here's the New York exchange clock. AMC's ticking up about 37. GameStop's ticking up above 200.
Money management?
I wouldn't say it's necessarily an options trap. It's more of to keep themselves in good position, for the algorithm to keep everything in, copacetic for the next day for them.
From one generation to the next. It's amazing how much you can learn from a cookie. Girl Scout cookie program. Think outside the box.
This is the countdown to the close. I'm Romain Bostic.
I'm Taylor Riggs.
And I'm
Countdown to close. Here we go.
And so I still heard terms chart. And Romain, this is the story. It's been big tech, and then it's been the Russell 2000. Do you want to correct me, or should I say it again? 2360 is the high that we were going to get in March, and we are slowly approaching that.
Yeah, 2023.57 here are right around the highs of the day. You take a look at some of the indices that are moving. The Philadelphia Semiconductor Index camped out near its record high here. You're seeing a lot of the apparel makers higher as well. That big EU deal, we didn't really get a chance to talk about it, but reporting that they're moving closer to finally relaxing some of those tariffs, and more importantly, the retaliatory tariffs.
This is expected here with the last few minutes. I wanted to see where we end the day. Here we go. GameStop at 199.93 currently. GameStop AMC still pushing at 37.05.
Rarely buy Tesla. Meanwhile, the insurance makers down on the day. Aon, that's actually your biggest decline.
I am pretty happy with my positions right now.
500. All right, let's get some market analysis here as we count you down to the close. Joining us right now, Stephen Whiting, Global Chief Investment Strategist and Chief Economist.
Nothing wrong with gaining 5 and 9% on the day. Nothing wrong with that at all.
I guess
I think it's a beautiful uptrend reversal.
I guess, has anything really changed here as we sort of await for the Fed meeting and I guess an announcement of a taper?
I think that there's a lot changing. Investors are very caught up in today's news, extending it on into the future. We just remember, again, what the views were like in 2020. When we hit a 15% unemployment rate, it was the beginning of a depression. We could only get worse. We're pricing in the possibility of long-term deflation. So a lot of the conditions right now, we're long building. We hear nothing but discussion of endless higher inflation. There are some long-term components that are meaningful. We've had some shifts within the economy that will require a lot of investment for us to really
just
satisfy
demand. Might stay above the 237 mark. This is going to be interesting.
Demand, which is affecting shipping rates. Highly seasonal elements are getting very confused in these arguments. And if we think about what's going on in the economy, the fact that wages are accelerating, there are shortages, there are mismatches. Well, you're not even seeing that those are the areas that are pushing up inflation the most. What's pushing up inflation the most is imported prices. Good.
Absolutely, I would agree. A green day is a great day.
Stimulus. So I think investors have to start, again, looking forward and really thinking about the last year and saying, let's be careful not.
Guys, there's no earnings report today. Please understand, there's no earnings report today. AMC earnings is November 8th.
Saw Starbucks last week raise their minimum wage. Do investors start to applaud the companies that are able to really negotiate with labor and do what they need to do for their employees? Or is there a part where that starts to erode margins?
Well, it's a lot better than the alternative. And again, I just worry a little bit about the fallacy of
Fucking
composition.
go. We got about 1 minute left. Oh, not even. We got 5 seconds left. Stay above 200, baby.
More, unless there's some reason for them to hoard that savings, it gets
there we go.
Into the revenues of the whole economy, of all consumer companies, right?
Did we close? We closed at 200.09.
Company, if they were not
That's
going
great
to have
news.
the labor they need, that would be a bigger.
AMC closed at 37.01. It looks like. Whoa, looks like they adjusted it. So GME closed at 200.86. AMC closed at 37.04. Fuck yeah, we saw a nice 5% and 9.45% gains today on AMC and GameStop. I am fucking pumped. Look at all this heavy short action right at the end of the day. The last 5 minutes, the last 4 candles, especially 1, 2, 3, and 4. Excellent, excellent day. They couldn't hold them back. I am very happy. And I have a feeling that the next few days are going to look even better. Don't be a dumbass. This is not financial advice, and I'm not a financial advisor. If you're going to invest in something, do your own due diligence, and make sure you give yourself plenty of time if you buy strikes, if you buy call options. If you were to buy call options, please understand that there's a high probability that you will lose every penny. But if you don't, you might possibly make a good amount of money. Make sure you do a lot of homework before and try, paper trading before you actually get into trading options, unless you've got money to burn, because it goes quick if you don't know what you're doing, and even if you do sometimes. So that's great. We had a beautiful day on the market. And it's days like today that make people think that AMC and GameStop don't run inverse to the market, because when you have shit like this going on, the market's having a good day. Stocks like GameStop and AMC are going up, not because of the market, but because there's delta hedging occurring. So they're technically going up at the same time as the market. That is what reduces their negative beta. What increases their negative beta is when the market comes down, assets are worth less, collateral is worth less, and further delta hedging, buybacks, and FOMO starts to occur. That is what causes the price to come up. So that being said, I really appreciate you guys. Thanks so much for spending some time with me and for coming by to check out the charts and the Ortex data. If you didn't see the Ortex data, I did drop it earlier in the video. You could rewind there if you want to take a screenshot of it, or if you want to check it out. I did it for both GME and AMC. If you want to see it, I can put out a second video of it just with the Ortex data. But thanks again for everybody for coming out to hang out. Peace and wealth. Wish you all the best. Good luck in the casino. Goddamn rich. Have a great evening. Get you guys with a live stream later, coming at you from Boss Blunt's Think Tank on Discord.
3, 2, let's go.
Getting fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't you?
yelling, cowboy, give me the fucking money. Get the goddamn money printer out.
Great.
AMC Ortex data. On loan average age 74.5 days.
Bounty better.
We're gonna be so fucking rich. Get the goddamn money printer out.
Great.
Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't
yelling,
you?
cowboy, give me the fucking money. Get the goddamn money printer out.
GameStop on loan average age 50.5 days.
Great. Bounty better.
Get the goddamn money printer out.